All right, good morning, good afternoon, everybody. Let's go ahead and get started. I am Trini John from Simpler Trading. We're going to get started with the broad market analysis. We'll be covering December 10th into December the 15th. Let's go ahead and get started. So, first, we're going to start right here from the room itself. This is your note section. Don't forget, all you do is come over here into your notes section and then look up BMA, which stands for Broad Market Analysis. And today's date, once again, 12/10/23. And you can come here to copy those actionable trading charts that we share here during this video. You can also pause the YouTube video and especially for like our neutral strategy, our futures trading and so forth, you can pause and then put those levels on your chart if you like those levels. Okay. We're going to get started here with what I call, the econ news, the catalyst that can cause volatility in the market. And as you all know, we trade supply and demand. So my job is to identify those supply and demand setups, but also teach you how to find them. And once we find them, we let the news, all right, kind of move that price in a quicker fashion to that. And I do believe volatility should spike up just a tad bit this week. I do believe that trend stays the course, but overall, my sentiment will come at the end of this. So please stay tuned. Before we get started, please give us a like and also share this with your friends and family. I know that our members here really value the information that we're giving out. And again, if there's anybody that's having a hard time in the market or maybe just can't quite wrap around why the market continues to do this or where to buy and where to sell, where to place those stops, all those things are very, very important. And I would hope that you can share that with your friends and family. So let's go ahead and move down. So this is Monday, December the 11th. You guys can see that we have nothing scheduled. Typically on a Monday when nothing's scheduled, I look for a trend to continue its course. And then as we get closer into Tuesday, you start to see that we get core CPI year over year. We have the monthly U.S. federal budget. Wednesday, we have core PPI year over year, FOMC interest rate decision, and of course, our man Fed Jerome Powell is going to be on the mic for a press conference. And again, all these times over here are Eastern time. I am personally on Central time here in Florida. Thursday, notice that we have initial jobless claims, import price index, U.S. retail minus autos and business inventories. And then on Friday, Empire State Manufacturing Survey, industrial production, and capacity utilization. Overall, the biggest thing that I see here is that maybe we set the playing field or Fed Chairman Jerome Powell. We'll be looking at zones a little bit later on in this session. Next, we have Earning Whispers. I use this from X. I've been following them for many, many years, and I find this very reliable. But please always check with your broker just to make sure that times haven't changed. As of this goes, you can see that earnings season's kind of coming to not a close, but it's just getting a lot less than what we're used to. But there's still some good names on here, and the underlying names are names that I use my earning strategy to trade. These are ones that I'm interested in. So you could see me buying some debit spreads into those supply and demand zones going into earnings. And if you're interested in that, don't forget, you guys, for anybody that's watching me out on YouTube and so forth, you can come in for $7 trial. Like it's absolutely inexpensive to learn so much from Melissa and I, and we can't wait to teach you that stuff. Okay, so again, Oracle, Adobe, and then we have Costco, my favorite. And I've already actually put the trade on for Costco, so please be aware of that. We did really well using this strategy into many earnings this last quarter. Now, the next thing I want to show you is going to be the SPY and the QQQ neutral strategy. I know that many of you guys like this. And so I want to show you the results, but I also want to say right away, we're using the same blueprints for this week. And the reason why we're doing that is because price really didn't do anything. It really did just stay neutral, if you will. Now, notice on here that this is where the price ended on Friday for the SPY and QQQ. And again, using the same levels, okay? But one thing that I want to point out here is just how well the levels work for you. Notice that we never broke down. We never got that short signal here on the SPY. We did finally on Friday start to move up. Remember, as we get lower on the curve, if you were to look at this as a curve right here, this is lower on the curve. Okay, this is where we're actually looking for support or buying when the trend is up. And our trend labels are right here. to show you what my Fibonacci is. So I'm coming over here, I'm taking a look at these, and we can see that the overall trend is bullish. I feel like everybody knows that. But again, this is just something that you could take a look at to kind of help you understand what trend it is that I'm looking at. Okay. Over here on the QQQs, you did get the short setup. We did hit T1 to the tick. I can't make that stuff up. We look for it to be support because overall the trend is bullish, so we're looking to buy that dip. And I gave you that sentiment last week as well. Notice on Friday we started to bid up about 390.98 and we closed here at 392.52. My target or next target would be 394. Your support is going to be there at that 391. Okay, same thing if we open up, if we gap up, my support is 459.65 and I'm looking for 464.91. Now, again, these targets are a little bit further away than your typical targets on the neutral strategy. And the reason why I'm doing that is because I expected the last week or so just to be kind of sideways and buying the dip. And because of that, I wanted to give it a little bit more room to the upside once we decide to create that base and then have that next leg up. And again, I'll talk about that a little bit later. So moving on down here, you're going to see that our next neutral strategy is indeed last week, so we're not changing anything. The thing that I really want to point out to you is understanding where the trendy edges are. Remember, trendy edges are identifying playing fields of supply and demand. It's really straightforward. If there are prices down below here, this is your demand zones, okay? And you can see that we're opening above supply zones going into this week. So why do I want you to know where they are? Because again, we may not come back to the 391. We may just come back into the trendy edge and find some love right there. So for everybody that's using your indicators, just basically bring your cursor down and you'll see those levels and where they match up right over here to the right hand side. Okay, so please be aware of those. Again, any level to the upside is resistance until proven otherwise. Any level to the downside is support until proven otherwise. And I'm not bearish, okay, unless we start to break down below this box on the SPY and the QQ. Now, that does not mean that I will not get short intraday off of a level, off of a indicator, say like your trendy turns, those kind of things. Obviously, we can intraday trade off of. What I'm showing you is the bigger picture on most of these, okay? Let's go ahead and move on down. So now we're talking about the SPY bigger picture, and I'm going to move this and we're going to go into trading view. And this is your SPY, and we have this on a quarterly. Okay, that means every candle here represents 3 months. So remember, I update these notes. They've been, we've been doing really well coaching everybody, and we're going to continue doing that, into the end of the year and into 2024 and 25. It's always the same. We do not change our strategy, supply and demand. Okay. Right now, these are the things that I want to point out to you. We are in the supply zone. We are above the entry into the supply zone. And as long as we're in here, we understand and respect that we are in supply and that the bears can kick you out of here at any time. Now, one thing that's really kept me on the right side is understanding how to identify that structure and understanding what's coming out of it. So for example, if you read here, as far as our update is concerned at 12:10, we have 19 days and 6 hours until the candle closes. At this point, this looks, and I anticipate, an inside and up formation. And again, if you don't know what that is, please watch my video here on YouTube and you can learn all about that and how to identify those. I'm staying bullish until the structure changes. The target remains 463 by 471, and your support is 451 by 446. Okay, so if you look here closely, basically all I'm doing is using those intra fibs. I took a supply zone and broke it down into quarters, 25, 50, and 75, and the structure or the support itself is at 445. Now let's talk about the structure really fast so you understand what I'm looking for when I say, hey, I'm staying bullish as long as the structure stays in place. Now this is an inside and up formation at the moment. It is not inside and down or inside, double inside until price breaks down right below that body right there of that inside candle. So let me show you on a whiteboard really quick. So currently what we have is a mother candle, if you will, an inside candle, and then we have an inside and out formation that has not closed yet. Again, 19 days and 6 hours. Okay, this is the mid candle or the middle candle. It's not until we go over the top of that body and come back inside that things would start to, or my tone would definitely change. So, what I'm anticipating, being a good supply and demand trader, you have to be able to anticipate. So, when we start to form this and the days have not closed out and the candle can still move and fluctuate, we have to understand anything can happen within those 19 days. It can look like this and come down to this one day before December closes. Okay. But at the moment, I'm anticipating an inside and up because I have no other reason to not think any differently. And what we find with inside and up formations is they create demand zones and they have to move a certain distance, okay, typically into supply. They hit that supply and then they break down. And your first usual suspect is an inside candle. And then that inside candle must break down inside and down. You create supply. And now we have what's called a range. We have two opposing zones. Then we create that demand, right? Price comes down into demand, then we find it, we get long, and so forth, okay? So again, that's what I'm looking at right now, inside and up, and we are moving in an inside and down, okay? So we have two opposing zones. That's why we're really sideways here, is because price is trying to chew through that supply that we created back in 2021. And in order for us to create that all-time high, we're going to have to get through that supply zone, right? So that is SPY. That is your quarterly look. And you guys can see some other features here. We had a buy signal. We came down into the cloud. We found support there. And overall, we've held that bull channel from 2020 to 2022. Now let's go ahead and look at our QQQ for the bigger picture. So we're just going to come in here and type QQQ. And there we go. Now notice just the same things that I showed you. I'll read this real quick to you. So your update as far as 1210 is concerned, 19 days, 6 hours until the candle closes. At this point, it looks like we close as an inside and up formation, but again, that can change. I'm bullish and buying dips until the structure changes. Next target is very close at 395, and you guys would have seen that if you looked at all your notes above here. All right, so 395. Your new support is going to be 379, and over 395, we could see 398 to 410. Now, again, this is a quarterly look. This is for my traders who are out there who are concentrating on the bigger picture and don't want to get too, wrapped up in the intraday move. So again, these levels are key for the rest of this year. Right, and again, that's QQQ. And as you can see, we've pushed through. On that inside and up, it still hasn't closed. We still have not broke through that supply. We have not made it all-time high, but we do have our levels. We understand them, and let's go ahead and just trade price as we see it. Next thing I'm going to show you is the US dollar, and this is going to be DXY. All right, so the DXY is a little bit different. I'm not watching it on a quarterly. I'm going to take you over here to a weekly. And again, you guys know this. You've been following my stuff for quite some time. We created this supply zone. We expected the dollar to basically to reject here, and then the market started to move up this entire time. Now, the dollar came down. It's about 61.8%, I believe. 618. Let's take a look. I could be wrong. Yeah, we came into 61.8% and we found bids or buyers to step in at that golden Fibonacci level. But one thing that we want to concentrate on now is understanding that the price of the dollar, okay, and I'm going to zoom in here for you real quick, is moving into the trendy cloud. All right, so that cloud is resistance until proven otherwise when we're underneath it. If you notice, we have this white dotted line here. All that is a trading view alert that I set. And my notes for this weekend is we're currently at resistance, so I would expect the dollar to potentially reject here. But even if it doesn't, I believe that bulls are in charge of the market, in the market, not the dollar, in the market until we start to see bids in the US dollar above that white line. And once we move above that white line, still we're running into an inside and down formation or a supply zone. And it's not unless the dollar can actually sustain 3 days above this. And listen to me, it could get volatile. Like the dollar could push really hard up here and you're like, wow, John, like it really crushed that 105 level. Yeah, I get that. But what I'm looking for is no matter what, we're still at supply. We're at supply here. It could reject. Let's just say this is Monday here. Tuesday, it comes in like this. Wednesday, we start to build a higher high. Then, yes, we have created support above that resistance, and we could see the dollar start to up. All right. But there's a lot of resistance overhead. Supply zone, resistance. Okay, so my expectation of the dollar is to reject in this area unless we start to see more than 3 days above that key level, which is around 104.5 to 105. Again, that's the US dollar. All right, now moving into the TNX, all right, the 10-year treasury, let's take a look there. TNX, if you look at last week's broad market analysis or you look over the weeks, everything's played out the way we wanted it to. It dropped here. Prices came down into demand. And one thing that I want you to take note of is you can now see that, demand was there. And the value of the TNX is moving up like we expected. Okay. Now, resistance is at 4.5 to 4.6. So if we open this, you can see we're pretty close, just like the US dollar. So again, that cloud, if I come over here and I zoom in for you, that cloud is here. And again, it is resistance until proven otherwise. And as you note, the US dollar and the TNX, their charts look a lot alike. We have resistance here, we have supply here, and we have supply above here. So again, we are underneath resistance and supply zones in the TNX and the US dollar. But when it comes to the ES futures and the NASDAQ, it's a different story. We're building support below and we continue to move up towards those supply zones. Okay. So all of these things really synergistically come together. And once you start to listen to me, you start to realize these are the only things you really need in your trading to understand and how to gauge where the market's going. And if you can learn how to read the market, that's going to be half the issues that you find when you become a new trader or even our veteran traders who still have a very hard time reading the market. Okay. So again, that's your TNX. And again, as long as we kind of stay sideways and kind of pop, if you will, into this resistance and stay sideways, things look great for the bulls. Okay. It's not until we start to bid above that cloud that I would say, hey, okay, now we start to raise a little yellow flag. Be cautious above that 4.6 level. Okay. So again, that's your TNX. Now let's go ahead and move down into the SKEW. We'll take a look there. So SKEW. If you don't know anything about the SKEW, I highly recommend you go to YouTube and type in John Carter, right? John Carter here at Simpler. He presented in Las Vegas a couple years ago, and it's a very highly viewed video, but I believe it's so important to understand it's still relevant to this day. And it will teach you a lot about the SKEW and the VIX. So please take the time to watch it. It's great. Now, these are levels that I came up with on my own coming into, especially this year. And I continue to talk about the SKEW. Basically, for anybody that's out there, if you don't want to look too deep into it, look, it really comes down to this. When we're in these red areas, we want to protect and risk off. It's more of like an intraday strategy, if you will. Um, but also supply and demand for me always takes the lead. Okay, so what we're finding here on the SKEW, and a lot of people will say, hey, the SKEW's broken, or I've at least seen that tossed around. It's not broken, guys. If anything, what I want you to do is do a moving average on this and understand where the SKEW is over the last 10 to 30 days, opposed to every single day where it's at. Kind of like the put call ratio, look at it on a moving average, not on a day to day, because it is a little confusing at this time. Now, back in 2021, we had the same issue. Okay. And I say issue because what happens is when usually the SKEW is at a level like this above 145 and more, what you'll see is that the SPY will go down. All right. So big time, it'll go down. All right. So to make this easy, you want to protect yourself in the red and you want to look to be risk on when we get down to the green. Okay. Now, 2021 and right now, currently, these have a lot of similarities with them. And I continue to say this over and over. Okay. If the SKEW continues to stay in the protect area and fluctuates to bearish and bullish within this little area, okay, then right now we're looking at the market to actually go right back up currently for next week. And what I mean is we're not getting the extreme levels. We're not getting down here. Okay, this is where I'd want to go long. What's happening is in this little area, every time it comes down to here, the market then goes right back up. All right. So instead of getting bearish, just pay attention to the trend. Again, we had that same issue in 2021. Everything was pointing for a pullback in the market. And so it was really hard to press the gas, even for me. But now I've really learned, because I've learned from here, is just trade what you see and stop trying to predict. All right. Stop trying to predict like what you think is going to happen in the market. Take from what we learned in the past. Basically, what I want you to do is think of it this way. It's not until I think we stay in here, basically gyrate, if you will, between these two levels. And it's not until we get into or closer to the election that once we get down here, that means the SPY would have taken its little dump. And then I'm looking to be risk on once the extreme levels are hit. Okay. Now, how does that work when it comes to fear and greed? Let me show you. So your fear and greed would be exactly the same. Notice that we're in the greed level, but we're not at extreme greed. Okay? Extreme greed, then what you would see over there on the skew is that we would be extremely on the highs. So this is like the high, and this is kind of like the low of the skew here for many, many months instead of down here. Now, I want you to know we played this very nicely here, and we were looking for risk on. This was a 200-point day in the ES futures when we finally got to risk. So for me personally, I like when the entire market is overly bearish and we hit these levels and we hit demand levels on, the ES, the QQQ, the Dow, the trip, all that, right? But right now, again, if I haven't said it enough, I believe we just kind of work inside these levels till the end of the year. Okay. Now the overall fear and greed index, again, it's only went up 1 point. Again, the market was very neutral this last week. Not a lot happened. So not a lot of changes. And we'll get to that here on the ES and the NASDAQ. Okay. So ES futures. This is what we're looking at. New charts for you guys this week. Not a whole bunch of new levels or anything like that, but just some words. So my notes. There was a contract rollover. The numbers are different, but the levels are where they need to be. Almost 500 points since the yearly trendy mid edge. And I keep reminding everybody of this because I really want it to sink in. I'm very passionate about what I do, and it is really frustrating for me to see so many traders get so bearish when we come into a demand zone. Now, it's okay if you never learned about supply and demand, I get it. I would be at extreme fear and peak fear in this level as well. But that's because before I learned about supply and demand, I just kind of followed what the masses would do. What I'm what I'm asking for you to do is learn a little bit about supply and demand. Understand where your bigger traders are sitting at, institutions, okay, and align yourselves with them and at least try to align yourself with them and start to think a little bit differently. Now, this is a big deal because if you were bearish are being coached by someone that's bearish, that's where I get really passionate because I believe you missed out on one of the biggest runs this year. And why? Because somebody that's coaching you doesn't quite understand supply and demand. Notice we have gone from white to green. The momentum has changed. And sure, I agree that price is extended here above the 9 EMA. Matter of fact, every time it never changes. You will come back to the cloud. You will retest the cloud, but timing is the variable. And that is something that not everyone can do. And not anyone can do it 100% with accuracy. So I just want you to be aware that these are the things that I'm looking at. Overall, on a weekly chart on the ES futures, this is your support, the cloud. And it happens to be around 4,500 and 4,428. So if we were to pull back into that area for some reason, I would look for buyers to show up there. We are also very close to a supply zone. What does that mean? It just means that we're close to supply. And if you're long, you're thinking, hey, there could be a possibility if we move up here, the market could pull back and digest a little bit. Pull those stops up and just understand that bears are in control up here. Okay. That is your weekly look. And the only thing that looks different this week, I went ahead and took the bigger zone. I broke it into quarters for you, and so that you could see targets. That way, if for some reason we continue to push up over 46.58, and again, see, this is where the numbers are kind of like off a little bit. But 46.60 is where they're saying we closed. This was at 4600. And typically, if I just type in ES futures, this will go away and go back. So I got to figure out what's going on there. But at the moment, this is showing you that, basically up here towards the edge. All right. So we should see that put up here. Okay. But these are my levels. We're going to stick to these. These are targets. This is a supply zone. So as long as we're up here, you do want to be cautious. Okay. So again, that is the weekly. Let's go ahead and look at the daily. A couple changes here. So please take note. You can stop this video, put these on your chart. Short trigger is still that same area. Our resistance is at 4606. And again, the numbers, the contract rollover, these are a little wonky at the moment. Buy triggers are here, but they're based on our structure. Okay, so please understand that as well. Moving on over here, the only thing that's changed on your 4-hour this week is that now we've created, once again, another support zone. So we have a lot of support, we have imbalances, we have some demand down here, and you can see it's been one hell of a rally. And because of that, you've created a lot of zones to the downside that could prove to be support. Okay. So for tonight, guys, we'll be doing the intraday charts. So you know what that means. I'll come over here to this chart itself, and these worked very well, by the way, on Friday. We'll be doing the same thing for tonight. I'll be putting some charts together. I'll put them out here on X. So if you want to take a look at those, please make sure you follow me so that you can get those updates as well. Okay. Let's go over to the NASDAQ. Well, wait a minute. Before we do that, let me give you my overall sentiment. Here we are, 6 weeks up and near the top of the yearly edge. Okay, so right here. All right. Now, we're also lined up with the next supply zone. Last week felt like the move was getting played out, but it also looks like digestion before the next leg up into this zone. Okay. At this point, the bulls are absolutely unstoppable. I will continue to focus on the big picture of being bullish and looking for clues on the lower time frames to get short. So again, my sentiment is bullish, but I will trade in either direction based off of the intraday charts and our intraday strategy that we use here at Simpler Trading in the trendy room. Okay, so therefore using the pre-market zone, demand levels, and supply levels, and paying attention to our trendy turn signals for those moves up and down. Okay. Now let's get into the NASDAQ. And somebody said, and I apologize to everybody that follows me. I went out, I think on Thursday or Friday, I answered everybody's questions on YouTube. I really appreciate your support. I really do. I didn't realize I had so many comments out there. So again, I tried to get to everybody and say thank you for your support. And again, I really, really do appreciate you. This is the NASDAQ on the weekly. There we are. Okay, you guys can see not much has changed. One thing that I would say, I say rip it. I really do. I'm looking for the test of the zone above. It's been 3 weeks of back testing the trendy edge at support. And what I mean is, see this trendy edge? See how we rejected it back in the day? Now I want to be very transparent. Okay. This was a hard time for me because I didn't use price action. I used hopium. Everything was awesome. We were doing great. And I was like, man, we could keep on going. I think we're going to hit the supply zone up here. And during this phase, I basically accumulated shares, options, and some things worked out, some worked. But that's the important thing, to be very transparent and make you understand that once you start to get close to these levels in supply, you really want to trust the price in those levels and not, your gut. So just pay attention to price. What I'm seeing here, okay, from analyzing is that the trendy edge, this blue level, it broke. Okay, so we rejected here like it was supposed to. We rejected the first time, but then we broke above it. Now we've come back 1, 2, 3 weeks to, say, hey, we want to back test this. It looks like support for the time being. My only takeaway from this is that we made a high 2 weeks ago, we failed to make a new high, but we closed up higher. All right, and the trendy edge continued to support. The only thing I don't like about this is that we did not make a new high, and we made, a lower high, but closed up higher on the week, okay, compared to the previous week. So what am I looking for? I mean, I feel like it's time to rip the band-aid off. Let's go, right? Let's make that move. Let's hold hands, Velma and Louise style with ES and the NASDAQ, and let's try to test those zones above on both of these. Okay, so that's what I'll be looking for when it comes to the ES and the NASDAQ. As long as we hold these support levels, I'm looking for the move up into the supply zones. Okay, let's go ahead and move over into the daily. There are some changes here as well. Please take note. You can write these levels down. And for some reason, the contract rollovers and stuff like that change things. Just look at your trendy edges. They should be fine. I would put those levels right where you see them. Okay. And let's go over here into the 4 hour, same thing, tons of demands, demand imbalances, and we have some support. And the reason why I'm calling it support versus imbalance is because it's all very different. There's an imbalance in price here. Notice how fast the candle moves up. Imbalance means that not all orders were filled, and once we run out of orders, they'll come back to this area, and then we'll find and fill orders. Support because we really haven't created what we call imbalance or demand, which is basically supporting at this level. So these are weaker for me than levels like this. Okay. So again, I don't want you to grade them. I want you to treat them the same, but I also want you to understand there is a difference between them. Okay. And that's the NASDAQ. And last Friday, you guys can see how well our levels worked again. You were able to go long out of the green. We got very, very close to the red zone, just off a couple points there. Everything worked out great. We had some great winners in the room over the week between Melissa and I, and a lot of folks here in the trendy room doing so well. We're putting those polls out at the end of the day to see how you guys are doing. I think we're above 80% win rate for our members, which that's why I'm here. Right? I want to see the success from you guys. So for anybody that's having a hard time, don't be afraid to email me as well. You can get my email there in the room and send me an email to discuss. But also, I want to encourage you to use the off-topic channel for your journaling. Okay, so it's not by any means a futures room or anything like that. I know that our future traders like to go in there and post their stuff, but it's also a journaling room. So please take the time to journal inside that room, and Melissa and I will be happy to give you feedback on the trades that you're taking that you might be having a hard time with. Okay, so overall, my sentiment continues to be bullish in the market. Okay, if anything, I just want to be patient every day with you. I want to identify the supply and the demand levels. We understand how to trade them once we get here. And if you want to watch me do that in the morning, I'll typically start doing this anywhere from like an hour 45 minutes before the market opens. I'll turn on my screens. You guys can watch me there. But basically, I'm breaking it down from a 2 hour and lower to identify these zones. And then we are using the PMZ or the pre-market zone, this red box, to enter long or short. And then we're paying attention to the trendy turn signals at the major levels. So all these things are repeatable. It's a very methodical, sequential process that we use every single day. It doesn't change. I can't wait to show you proof of concept coming this week as well. Let's have an amazing week, and thank you so much for being. Have a great day.